We may only have 1 1/3 hikes priced in 2018, but there are those that are looking at Powell's upbeat tone here and saying it could open the door to a total of 4 rate hikes this year. Joining us now from Chicago is Jim McDonald. He's Chief Investment Strategist for Northern Trust. Jim, great to have you with us. You actually think they only go twice in the next 12 months. So what do you make of Jay Powell's comments today and the market's reaction?
Well, it's a reaction to his more upbeat view on growth, and so that is a positive outcome of this. The phrase that headwinds have become tailwinds is a reflection that the economy has gained some steam. If they do go 4 times, we only think it's going to be for the right reasons, which is that growth is good, inflation's not out of control, and in that environment, that will not be a bad environment for risk-taking.
Would that change financial conditions at all? And I ask because the new chairman made clear that there's no interest, or he has no interest in changing the plan for gradual reductions in the balance sheet. And a lot of people say any change in that schedule would perhaps tighten financial conditions.
Yeah, so I think they're going to stick to their pre-programmed plan on the balance sheet adjustments. There's no reason for them to alter the timing of that. It only raises uncertainty. And the good news is there won't be any inflationary pressure, we think, that'll be viewed as a sustained risk that would cause them to accelerate that roll-off of the balance sheet.
So what we were just looking at there was a backtracking slightly of the U.S. 10-year yield. I mean, we keep talking about it approaching this 3% level as being quite key here, Jim. To what extent is that a cap for the 10-year yield when we talk about demand from outside of the United States, with the likes of the ECB and Japan still stimulating their economies and people still questing yield?
We do think there's a bit of a cap at around 3% on the 10-year over the next 6 months. There is a big interest differential with overseas markets. It is expensive to hedge the dollar here, so it's not as clear of a big differential as many might think. But we have seen and expect to continue to see good demand from overseas investors for U.S. fixed income.